Deputy Ambassador, thank you very much for those words and for that terrific oversight of both the challenges and the opportunities in Ukraine. In the interest of time, we won't be doing the In Conversation with, and we will move to our final panel session of the day, which I think is particularly appropriate given the issues that we have been discussing. One of the classic challenges that we will now have to look at, and one that our industry has gone through time and again over many decades, is how we hone and redefine the UK value proposition. How can we ensure that we continue to position our strengths in investment management, in innovation and in sustainable finance to capture global market share? And where can the UK improve its ability to attract global talent and investment in innovation and technology to ensure our continued success? We've got a fantastic panel to look at that, chaired by Shazia Deenally, Vice President, Government, Public and Regulatory Affairs at Moody's, together with Shaun, the EMEIA Financial Services Climate Change and Sustainability Leader at EY, Rohit, Dhawan, the Group Executive Director of AI at Lloyds Banking Group and a member of the Next Generation Leadership Council of the TheCityUK, Dame Julia Hoggett, the Chief Executive Officer of the London Stock Exchange, and David Sansom, the Chief Risk Officer at Lloyds of London. Can you please welcome them to the stage?
Thank you for that introduction, and thank you everyone for sticking around for the third and final panel of this brilliant conference today. I think we've heard a lot of really interesting insights and stuff to take away. So I think today, this final panel in particular, what we're hoping to draw on is that central question, that underpins all of these themes is, how can the UK continue to define and strengthen its value proposition? So I'm going to jump straight into the questions. Julia, maybe for you, in a world of geopolitical volatility and regulatory uncertainty, what is the UK's core value proposition to global markets today?
It's not a joke, but it may be perceived as one. The starting point I give when I'm answering a question like this very regularly is that keep calm and carry on is not just a mug in this country, it's a way of life. Because I do think that actually that sense of we know what the important things are, we know what the guardrails are, we know what the rule of law is, we apply our regulation without fear or favour, and we continue to face the world as it is actually, in the way our financial markets work, exactly what its strengths are. But I think if you unpack that a little more, I've got a very varied day today, but I started the day launching the first retail investment campaign in the UK since the 1980s. That's bringing together 20 different institutions. The Chancellor was there, the EST was there, the Financial Conduct Authority was there, the Money and Pension Service was there, and the 20 firms, and a huge number of people engaged in enhancing retail enfranchisement in this country. There is a unified vision for the shape of our market in many, many places, which actually doesn't happen in a lot of other jurisdictions. And I think that is part of our USP. The other piece of the puzzle is just the core things that we have. This is a bit insert technical, but having common law as the basis, actually we now are moving much more back from a prescriptive set of how we think about rules to much more principles-based rules. The great benefit of common law is it basically articulates the black box past which you cannot go and says within that, have at it, which to innovate and to evolve is a critical component. And we've had that for many, many years. We haven't necessarily sold it the way that we should, but I think that those core ingredients really, really matter.
Yeah, thank you. And actually that point around common law, I think leads really well into this next question for you, David. Kind of regulatory certainty and the London standard wording in contracts are really important to the insurance industry. Why else might the world still want to use the UK for its global insurance needs?
Yeah, thank you, Shazia. And I think sort of building off from where Julia left off talking about common law, I mean, we have a huge amount of natural advantages in the UK. I think we'll talk today about how we can make best use of those advantages. And actually, I might start somewhere that might not necessarily be the most popular starting point, but actually the robustness of our regulation, strong standards around governance, risk management, and capital. I mean, this is why a lot of businesses and a lot of capital come to the UK. I think where there are challenges is around the efficiencies of our processes and regulation. And again, maybe we can sort of come on to talk about that. But within the insurance market, as well as that sort of strong foundation, governance, risk management, capital, common law, tax, we have, effectively an incredible ecosystem of expertise. We have underwriting and broking expertise that is there and has that history of providing specialist solutions to complex problems. And that is why people come to London with their insurance needs. In the Lloyd's market, we're an international market. 90% of the premium that we have comes into the UK from overseas. So that business and the capital investment to support and underwrite that business is coming to the UK. And I think it is for those reasons, the robust structure, the expertise, finding solutions to complex problems. And I might just sort of finish this answer with a very good recent example of this connected to sort of what's going on in the Middle East. People may have seen publicly last week, the market announced a new facility to provide additional marine insurance capacity. That is a great example of the market innovating, responding to a resilience challenge, coming together, bringing capital and underwriting expertise together to solve a global problem. And so I think it is that type of expertise, that's the reason people come to London, and it's those type of advantages that we should be seeking to maintain.
Yeah, absolutely. And we just heard as well in Ukraine how that's been absolutely vital. Shaun, how far has the UK come in building its leadership in sustainable and transition finance, and what does that tell us about the UK's wider position in the global market?
I think in terms of the wider position, we'll come back to some of the principles, David, that you've spoken about, and Julia. I think there's a lot of commonality in the ecosystem that's being created. But if we look over the last 10 years, I think it's been a profound journey. Sustainable finance has definitely moved from an emerging asset class to a systemic asset class. And those financial institutions that have invested in it have seen the returns and the commercial reality of that. In the first half of 2025, there was 555 billion of sustainable debt mobilized, which is a 17% increase year on year over the last 4 years. And that cumulative amount is now 6.2 billion. And the UK has played a hugely significant role in this. And actually, if we go back to 2015, and Julia will know this better than anyone, the London Stock Exchange Group set up the first green bond segments. And if you look at it today, the sustainable debt market on the London Stock Exchange hosts over 564 sustainable bond issuances across 134 providers and totals about $334 billion. And that is really important because actually, if you look at the UK from a standalone perspective, it only does about 10 to 12% of that. The rest comes from the credibility and the ecosystem that the UK has built to bring the right expertise together, whether that's from a structuring perspective. David, you mentioned on the insurance side, specialty insurance specifically, but also the kind of legal, accounting, and other ecosystems that need to come together, which creates an incredible position for the UK in servicing that global market. You talked a little bit about transition finance, Shazia, and there again, it's we know what is required to finance a transition, and the numbers are staggering. But the UK again is taking a leading role through initiatives like the Transition Finance Market Review, which has led to a number of recommendations around how we increase transition finance and put the UK at the center of that. But also, we've already made the point around regulation and that kind of policy and regulatory framework, building kind of trust and integrity, which we've also seen through things like the Transition Planning Task Force and how that's now being incorporated into the sustainability reporting standards in the UK.
Yeah. So shifting a little bit to thinking about how we need to change how the UK presents itself, maybe a little bit. Julia, maybe I could ask you, where do you think the UK's strengths lie in sort of risk, capital markets, sustainable finance? Where's the overlap? And how can we tell that story a bit more effectively?
Yes, so I've just spent 3 weeks in Asia, and my first observation is the best people who can tell the story about the strengths of London are the people who come and use London but aren't from London. The people who talk London down the most are the people in London. And I've started using this phrase in speeches a lot, which is that we actually need to stop throwing shade at ourselves as a nation and then wondering why it's a bit chilly and a bit dark. So I think the first point is we have a great story to tell. We need to actually have the confidence to tell it. How you synthesize it is a challenge, partly because of our strengths. You know, London Stock Exchange is the only global stock exchange that is world leading in equities, world leading in debt, world leading in funds, now has the first ever regulated crossover market and does private on-chain fundraising. Now, there is no other venue in the world that does that. And yet, that wouldn't be necessarily what you would read in the papers. The complexity of the strengths is the hardest thing to synthesize. How we show up as one narrative, I think, is. But the reason I use the phrase keep calm and carry on is because I think it's important. Let's take transition finance and sustainability as an example. London Stock Exchange is also the only venue that actually has designations not only for debt and across not only green finance but transition, blue finance, etc., but actually for equities and funds as well, and the first financing market for voluntary carbon credits. What we do as a country is go, okay, if it's the right thing to do, it's the right thing to do. How do we do it properly? And how do we then make the system work to do it? And one of our USPs as well is, and I think green finance is a really good example of this, the perfect can become the enemy of the good. We have seen examples where we've created, in other jurisdictions, incredibly prescriptive taxonomies. Now, I take a very simple approach to this. The hardest thing to do, or one of the hardest things our generation will do, and the most important thing our generation does, is get to net zero. You know, if it was easy, we'd have done it already. You know, the further we are from 1.5 degrees in terms of the pathway, the more we need moonshots. Therefore, the less you need quarter-on-quarter proof of demonstrable impact, because the only thing you'll invest in is the lowest hanging fruit. And the UK taking a step back and going, actually, how do we make this pragmatically usable to achieve the objective, rather than becoming overly prescriptive? That is one of the strengths of the UK, being principles-based, being outcomes-focused, and really making sure that our regulation can deliver that is a USP that is not demonstrated around the world. But also, we haven't changed our approach to the importance of sustainability. You know, we are keeping calm and carrying on. It is still a focus. It is still important because it matters to the global economy. And not flip-flopping as well matters. So we have immense strengths. I think we have to get braver about promoting them. And when you are as world leading in insurance as you are in all forms of capital raising, as you are in international flows of FX, as you are, it's hard to synthesize, but there's a reason that we are. The final point for the value of the UK for the rest of the world is the UK is inherently focused on the rest of the world. You know, even if you take the FTSE as an example, the vast majority of revenue that is reflected in the value of the FTSE every day is not made in the UK, because we are a big economy, but we're not the biggest economy, by definition. So the investors who invest in London understand stories from around the world, and they understand how to value them, and they understand how to value the risk, but they also understand how to take the risk. And that is a unique place for the rest of the world to find London for. I'll finish on one point, because I can, as you can tell, go on about this for a very long time. I have the privilege of chairing a thing called the Capital Markets Industry Task Force for the UK. And one of the founding vision statements of that is, how do we create the best possible environment in this country for great companies to start here, grow here, scale here, and stay here. But the reason our capital markets work as well as they do for the rest of the world is we presume that every other country on the planet wants to do the same thing. So we don't ask them to turn themselves into a pretzel in order to get access to our market. We ask them to meet our requirements. We apply those requirements without fear or favour. And then if you meet those requirements, you come to London and you meet the capital that you need to be globally consequential from your own country or from the UK if you choose, but you're not required to. That ability to facilitate global flows and allow everybody to have the agency they want in how they access that capital is our USP, I think.
Thank you for that. And maybe, David, just thinking about sort of AI and sort of technology, from an insurance and risk perspective, what new opportunities does this rapid growth of AI and emerging tech create for the UK financial ecosystems?
I think it's a great opportunity of where that specialist expertise and capital can come together. I mean, AI is generating huge numbers of new assets, physical assets, digital assets, and all of those, need and can benefit from insurance. So, the obvious example is data centers, the risks around those, the physical risks, the construction and the liability providing insurance solutions for those. These are complex, big risks. This is exactly the type of thing that the London market does really well. If you sort of take another, I think, similar example, London is a market which has pioneered cyber insurance. So 20, 30 years ago, the first cyber insurance policies written in London. And now the thing that is on so many businesses' minds is the AI risks and how that sort of relates to the risk of a cyber attack. So again, this is exactly the type of risk and resilience problem that businesses have, where London can provide an insurance solution to what is a complex set of risks. And we have in Lloyds, we have an incubator in Lloyds. It's called the Lloyds Lab. We're very proud of it. It takes innovative businesses. We have about a cohort of about 10 firms a year. They go through the lab. We match them with underwriting and broking expertise. We help them develop their products. You look at the type of products that are going through just our lab. They are at the moment, the majority of them are AI driven, and we are seeing AI insurance products start to emerge to cover the type of AI risks that businesses are running every day. Mm-hmm. So you can buy AI liability insurance to cover the use of generative AI in your business. You can buy that today. Mm-hmm. And we're seeing AI being used within underwriting to do analytics around risk assessment and pricing. Mm-hmm. So we are seeing it as a tool. We're seeing it as effectively a risk that could be insured, that needs to be insured for businesses. So it's a fantastic opportunity. It is really well aligned with exactly the type of thing that London does well. Big, complicated. There are some pretty scary risks there, but London is exactly used to and very good at assessing those.
Yeah, absolutely. And maybe, Rohit, now I can bring you in now that we've got AI on the tongue. Maybe you could talk a little bit around how AI is changing the way financial services are delivered, what the UK needs to do to position itself as a trusted leader in terms of AI and advanced technologies.
Yeah, absolutely. Thank you, Shazia. And interesting, David, you said insurance for AI and AI for insurance,
yeah, exactly.
both, right? Yeah. So, look, as far as AI is concerned, right? I mean, I work for Lloyds Banking Group as the head of AI, so AI is absolutely my day job. But I also have the privilege of being the sector AI champion for financial services appointed by HM Treasury. So, in that role, in collaboration with the CIO of Starling Bank, we are looking at, what does the ecosystem in the country, whether it's the government, the regulator, other industry bodies, need to do to facilitate faster adoption, responsible adoption, and scalable adoption of AI for financial services. And fundamentally, right, AI, my personal opinion is that it's, the biggest technology transformation we've seen in the history of humankind. And a lot of people might think that AI is overhyped. I actually think it's underhyped. And AI is fundamentally transformative, right? So the problem we have right now, not just in the UK but in general, is that there's a huge disconnect between the pace of technology evolving and how it's actually applied, and where it's applied is where the rubber hits the road, right? It's basically with the insurers, with LSEC, with the banks. If you look at a financial services perspective, right? And have we, really, leveraged the power, the transformative power of AI to fundamentally change how we serve our customers, how we manage risk, how we optimize our operations? The short answer is no. And the reason is because, our risk, regulatory, legal, technology frameworks are not necessarily ready yet to adopt the complexity of the new AI technology, right? I mean, one simple example is that generative AI or agentic AI is often a black box because you don't necessarily have an explanation of how the model came up with an answer. Which is okay, right? When you're using, your general purpose AI tool like ChatGPT or Claude or whatever your favorite tool is, but it's not okay when it makes, financial decisions on behalf of a customer or on behalf of a team member who's working for Lloyds Banking Group, and if something goes wrong, we're not sure where the accountability sits, right? And then you have, emerging technology like agentic AI where you're expecting bots to make decisions autonomously. Across a series of processes, but what we don't have right now is the framework to be able to allow that to happen. So we don't know how legal will cover for those autonomous decisions when something goes wrong, or if we don't even have the protocols right now in place to facilitate that, right? So I think there's a lot of work that needs to be done to bring the technology to life, with enabling the ecosystem around technology providers, the government, the regulator, and other industry bodies. One of the other discussions I was having with Julia in the green room was around the potential of AI to be used for financial advice. And today, you can basically give ChatGPT all your bank statements and ask for ChatGPT to give you a recommendation on where you should invest. But the banks and financial institutions can't do that. And that's a huge gap, right, that we want to close, right? So, financial institutions absolutely know a lot more about investment and financial concepts, than the tech companies. And we should be allowed to be able to, close that gap by really, prompting and helping, the UK population where money is held up and not necessarily moving at the pace where we want it to move. So there's a lot to be done, but like Julia said, right? We definitely have the right mindset. We are really well positioned in terms of the world economy, and I'm relatively new to the UK, so I can say, look, the momentum and the excitement I've seen in the UK economy is second to none. And I've worked in Singapore before I moved to the UK, and I was Australia based before that. There is a lot of potential in the UK market. We are well positioned in terms of the physical location. We have fantastic universities. We have great talent, and overall we are an attractive destination for global talent as well. I think we just need to keep calm, carry on, and stay focused.
Fantastic. Yeah, no, really great endorsement there. So that's great to hear. Shaun, maybe on you. How can the UK continue to lead on transition finance, carbon markets, and nature markets while maintaining clarity, credibility, and international interoperability?
Yeah, it's a really great question. So first of all, it'd be remiss of me not to talk a little bit around the potential scale of the opportunity. I mean, we talked briefly around transition finance, and as I said previously, there's loads of big numbers that are thrown around transition finance and what's required. But specifically in the hard-to-abate sectors, and Julia mentioned this earlier, there is an imperative that we decarbonize and we provide the finance that is required to do that. Carbon markets and nature are two really interesting areas. From a carbon markets perspective, again, if you look at some of the analysis that's been done by MSCI, but also the other banking institutions out there, the carbon markets today sits at about $10 billion. The projections are out to 2030, it should reach about 30 billion, and then out to 2050, potentially up to 250 billion, depending on how the market plays out. But there's some real challenges still around carbon markets, not on the compliance side, as we know, but really on the voluntary side, which really anchors into the integrity of those markets and the verifiability of what are backing those carbon credits. But the great thing about where we sit in the UK, and you would have seen this probably even this morning, that's how quickly things move, is the City of London Corporation, together with the Carbon Markets Forum, put out an analysis around the potential opportunity that the carbon markets represent. But also importantly, being really clear on the barriers that still exist today around scaling those carbon markets, which actually goes right to the center of where London provides that ingenuity around the kind of structuring, common law, the accounting, but also the verifiability. And I think the big things that have changed, we've been talking about carbon markets for probably 20 years, but I think the two big things that have changed is one is the data and technology. So back to the verifiability points, we are much, much better now at being able to verify what's out there. And the second thing is the progress that's been made from a global collaboration perspective around what we refer to as Article 6 coming out of the Paris Agreement, where now for the first time there is a registry, a taxonomy that's been created that allows sovereign nations actually to trade voluntary carbon credits. So I still think that market will continue to expand, and the UK has a really important role to play, as well as LSEG and others as we go on this journey. On the nature side, just to kind of close the discussion, it's a little bit less mature. I think the one thing we do know, and we saw this from the World Economic Forum last year, it is like irrefutable that a large portion of the GDP that we generate is either moderately or severely going to be impacted by nature risk. Now, they put that number at 50%, which means obviously that we need to evolve and adapt, which is going to require nature finance to be able to do that. So again, I think the UK will play a really important part in the collaboration that's required, and we're already doing that. You know, there are a number of initiatives. Rohit talked about Singapore and the experience that he has out there. But, you know, between Singapore, the UK, and the Middle East, specifically Abu Dhabi, there is a lot of collaboration going on around how we build that infrastructure to be able to scale both the nature and the carbon markets. And that interoperability is going to be key to be able to do that.
Yeah, thank you for that. I think it's been really great so far. We've been focusing a lot on the strengths that the UK has and how we can sort of turn those into real USPs. So thinking about what the UK needs to do to turn these into long-term advantages, maybe for you, Julia, just sort of stepping back, what do you think could be the UK's updated value proposition as an international financial centre, say over the next decade?
So there's a bit of me that thinks it's the same value proposition delivering a different set of outcomes, because that's what is required at the time, if you see what I mean. So let me tell you a bit of a story journey that we've been on at the Exchange. So I jokingly say that there was this famous or apocryphal, I'm not certain which, a phrase from Ronald Reagan that the most dangerous words in the English language were, "I'm from the government and I'm here to help." And I sort of have used that with my primary markets team. If you think about it, if you want to go and have a conversation with the primary markets team of the London Stock Exchange, then you need three things. You need to be a company that wants to go public. You need to be a company that wants to be public about the fact it wants to go public. And you need to want to be public about the fact that you might want to go public on the London Stock Exchange. That's an increasingly small kind of thing. And there is the risk that people will look at my origination team and go, okay, well, you're a one-trick pony, I know what you are, and I either do or don't want to talk to you. Now, if you look at actually where we are, from a multi-asset point of view, having created the private securities market as well, the world's first regulated crossover market that enables private companies to get access to liquidity, everything we have on the sustainable bond market side, everything that we're building on the fund side, I have sought to change the proposition of the London Stock Exchange to one very simple question. How can we help? And that is really cutting through. Now, in order to deliver that change in proposition, we have needed enormous support from the government, we've needed enormous support from the regulator, and we've needed a unified vision for what the shape of our capital markets could be. And we've had it in a remarkable fashion. So that, I think, already illustrates that it is about making sure you meet your customers where they are, you meet your clients where they are for the needs that they have. The iteration on marine risk is a prime example of that. The next iteration, really, though, for the sake of the pipes and plumbing, is digitisation. And I'll be quick, but I send inanimate objects down vaguely intelligent pipes right now, let's be clear. But actually, tokenisation, digitisation enables me to create a contract, a smart contract, that reflects all the rights and responsibilities of an asset, and it can go anywhere in the world that it is legally allowed to go. Now, we can think about that as DeFi or not. I'm a former regulator. I run the stock exchange. I'm completely in Reg Fi world. And I believe that the last two things that should go in this digitisation journey are sovereign control of monetary policy and sovereign control of securities regs. But this is a mechanism of us moving as an ecosystem from doing what is a lot of quite expensive post hoc compliance to doing ad hoc compliance. If the system can only move in the places that it's allowed to move at the time, you create a cleaner, cheaper to operate system that is more interoperable across the world. Yeah. London is rare as a genuine multi-asset kind of capital market and venue and city and proposition. And the more that we can take advantage of that, the better. The fact that we have regulators who will engage with the question that Rohit's phrased, because it's an incredibly important one. The sovereignty of decision-making is a critical question in the context of AI, but it's been a critical question. It was a critical question when I was Director of Market Oversight, and we were thinking about algo models. You know, so it's how you engage with a fundamental question, and then you have regulators who are prepared to have that conversation, and overtly state, as they are, that they want to be outcomes-focused, but also technology agnostic, insofar as they can do, so long as the immutable principles that they care about can be upheld. I think that is the mechanism of London really meeting our clients and our customers where they are and meeting their needs as they evolve. And that is our USP, I think.
Yeah, and just touching on your interactions with regulators, would you be keen to hear your thoughts on the secondary objective and whether that's helped or whether it was just solidifying what the regulator were already kind of doing and how they were approaching things?
I think, look, I'll be quite blunt here. In the Capital Markets Industry Task Force Conference last year, we had Sarah Pritchard from the FCA, David Bailey from the PRA, Norska Delfas, Richard Moriarty and Sarah Cardell all on stage talking about the objective. And I think the reality is that, and Andrew Bailey said this for many years, you can't have a market that conducts itself with good conduct unless you've got a deep, vibrant, liquid market where people have the opportunity to make appropriate returns. It's when they don't that you actually have greater risks.
Yeah.
And producing the best possible outcomes for the people on whose behalf we regulate. In other words, you need economic growth, you need the UK to be competitive because that does actually do that, has not been a weird concept to regulators. But you need to change the ecosystem because if anything goes wrong and somebody is summoned and then there is a post hoc review that said you ought to have known that at the time, it does reduce the amount of risk appetite amongst regulators. Yeah. So that is why the Chancellor not only said I want to have a competitiveness objective, but also I'm going to give you the air cover to recognise that we need to facilitate risk-taking in the system. Because the deployment of risk capital in the economy is a critical driver of its growth and dynamism. And you need to have both come together. Yeah. And I think the combination of those two together has been felt by the leadership of many of our regulators and has resulted in changes to what they're doing. So take what the FCA has done this morning on retail access to advice and advice warnings. This is about getting Britain to change its retail risk appetite to something where actually we're not losing money in real terms by keeping our money in cash, but we're actually investing in the future of the economy. And that is a critical shift. So I'm seeing it in practice. Yeah. And I'll finish on this point. We occasionally get incoming calls from the regulator going, we're thinking of doing this, and we hadn't even asked for it yet. Now, I haven't lived in a world like that before. I'm very much enjoying living in that world. Yeah. But I think it's entirely to the regulator's credit that that's what's happening.
Yeah, thank you for that. And I guess with Rohit, talking about all this technological change and, very exciting time, that level of innovation requires talent. And it'd be interesting to hear your views on how the UK can attract and retain talent in areas such as AI and quantum and technology, and especially with your international perspective, it'd be really interesting to hear about that.
Yeah, absolutely. Look, talent is really, really important. We are in a global, competitive marketplace for talent, and I'm personally myself on a global talent visa, which I shifted from my default skilled worker visa. So the UK government has launched these talent programs, that fast track you through the immigration chain and also give you some other incentives. So I think that's fantastic. The other thing about talent is, we also need to develop our own talent. So I think the talent is here, right? I mean, and especially, with some of the new emerging, technologies, they're so new that, even if we go looking for talent elsewhere, we may not necessarily find that talent. So, I would rather invest in developing our own talent, through, upskilling training programs and hands-on learning, in parallel to attracting talent from overseas. And I think that's really critical because, when you think about talent, especially with respect to technology, the first thing that comes to your mind is like a developer or an engineer, right? But talent doesn't, necessarily confine itself to core engineering or software development or AI development. We also need talent around the scaffolding of new emerging technologies like AI. So you need talented people who are experts at responsible AI. We need talented people who are experts at strategizing AI systems and have a systems thinking approach. You need talent experts who are very much in tune with AI regulation and AI risk management. And given the newness of this technology, especially with regards to AI and quantum and tokenization, right? I think the opportunity for us is to upskill faster than others. And I think that should be our talent strategy. Because what we are also seeing, with regards to talent is that the nature and shape and size of the workforce is changing, right? So as we automate a lot of what we do, we need less people doing repetitive tasks, and we need more people building, managing, using, and deploying AI systems. And those people are not just AI developers. They are people who will run and operate these systems and manage the risk around these systems and connect these systems and integrate these systems with other systems, so on and so forth. So I think it's like broader upskilling more than anything else.
Yeah, absolutely. I mentor some year 10 students, and I think 90% say they want to work in IT and data and computers. So the talent is the keenness of that talent is certainly there in the UK. And maybe, David, how can the UK continue to meet the needs of the international market as risk proliferates? And obviously, we've heard a lot throughout the day about the different moving parts.
I was going to say, Shazia, you should tell someone to come and work in insurance.
Yes, I do try and
It's a
pitch
brilliant
it.
industry. I might just pick up on the sort of regulatory point, because again, I think this is about the complexity, the friction, and the inefficiency in our processes. So at Lloyds, when we speak to businesses and capital that's thinking about coming into London, I mean, they have other options. There are other insurance hubs, Singapore, Bermuda, for example. When we talk to them about the experience, it is very different. And I think the things that we need to do to enable quicker, more efficient processes for businesses to set up and bring their capital and their people into London, we need processes that are more predictable. They need to be quicker. And they need to be sort of better attuned to the actual business processes of the applicants. So, I mean, a good example, we have a senior managers regime in the UK. Actually, I think the PRA came out yesterday with a policy statement that's looking to make that more flexible to some degree. That is hugely welcome. That's a start. We need to do much more because it is the way in which we enable these businesses to come to London to remove that friction in our processes that's so important. Again, this is not about relaxing standards. This is, we want to maintain that framework. We talked about the trust and integrity that creates in the UK, but we need to make it easier for businesses and capital to come to London. So I think there's a lot that can be done in that space around processes. I think the regulators, to your point of view, they are leaning into this. There's definitely more they can do. I think the secondary objective helps, but I think it's also incumbent on us as industry to be constantly feeding in those challenges and those ideas and pushing them. I mean, at Lloyds, probably the last thing I'll say, at Lloyds we have an oversight role, so we're sort of partly a regulator of our market, and we think about this challenge all the time. We think about this sort of balance between protecting our market because we want it to be a robust market with strong financial positions, sustainable underwriting and performance, return on capital. But we also need to promote it. We need to sort of get out the market's way in terms of allowing what it does to best, which is product innovation, as we were talking about earlier. Yeah. So that balance between how we oversee, how we regulate, and how we allow innovation, product innovation, I think is so important.
Yeah. I know we're super quickly running out of time, but maybe just to wrap up, if all of you could maybe offer one recommendation to government or colleagues across the industry to ensure the UK continues to sharpen its value proposition over the next few years. Just final comments.
Yeah, I mean, I'll be very, very quick. I think we've proved where we have like one voice on a certain topic that consolidates all the experience that we have. And we use that in bilateral conversations with other countries and other areas. I think we have the most success. So that is definitely relevant to what we're seeing from a sustainable finance perspective, but will obviously increase as we look at transition finance, carbon markets, and nature markets.
Thank you. Shazia?
I'd agree with that and make sure we get out of our own way and don't throw shade at ourselves.
Yeah.
Mine is very simple. Can we get better internet and mobile connectivity?
Yes.
I think that'll be a starting point.
Okay, fantastic. David?
Well, I think of lots of things, but I might actually just echo your points on talent. Make it easier for talent to come to the UK.
Yeah, thank you very much. I know we're just run out of time, but if there are any, burning questions from anyone, no time. Sorry about that, but thank you, everyone. Thank you.
Thank you.